Hi, I'm Steve Carlson, Independence Party candidate for the U.S. Senate in the August 12th Independence Party primary, and this is my second Jobs and the Economy primary video. Because jobs and the Minnesota economy is the #1 hot-button issue in the 2014 elections, exceeding even all the other hot-button issues, I'm making a total of 3 primary videos on different aspects of creating jobs in Minnesota and the Minnesota economy. The first one I made focused on the minimum wage and introduced this millions of jobs idea. In this second video, I want to directly address the promise that I will work with Congress to pass legislation and get it signed into law that creates millions of jobs and show you by a presentation how it will work. The third video will focus locally and update the impact on jobs of the Central Corridor Light Rail project, which came online in 2014. Even though it's local and regional, the state taxpayers will be paying for operational costs, as the average ride is just 3 miles on a 10 or 15 mile project, so that is an expensive short ride. There are many problems with it, but we have acquired the light rail, and it's going to be expensive in many ways. But as I have always advocated, we need to leverage this to create jobs by growing businesses in downtown St. Paul. And there are 2 development projects in particular that I want to endorse to develop downtown St. Paul, help finance the train, and even help some businesses along University Avenue, which has really been damaged by this huge and inappropriate stimulus package project, Central Corridor, foisted on St. Paul by the Obama administration, Betty McCollum and Al Franken. It damaged businesses and communities on University Avenue in downtown St. Paul, including Macy's, which closed. And the St. Paul City Council has only recently figured out that it's now more cost-effective to use the space where Dayton's, Marshall's, and then Macy's have previously anchored with another project than it is to tear it down, because that would cost millions of dollars, probably generated by increased property taxes. Because of the light rail, Macy's business was hurt, and now it has to be restored. A thriving St. Paul downtown will help the entire East Metro area of the Twin Cities, help pay the operating costs of this huge and unwieldy infrastructure project, and hopefully help restore or maintain some businesses on University Avenue near the Capitol. A similar approach might also be possible at the Minneapolis end, but the great length in between is not workable and will be an expensive white elephant, a huge and costly mistake. But to return to the main point of how we can create tens of thousands of jobs in Minnesota and millions nationwide. If Congress were to pass legislation restoring the right of the states to enforce their own usury laws, the states could create millions of new jobs and boost our economic growth to be competitive once again in the world economy, driving exports but also protecting our American market by real economic productivity against the incursion of overseas companies. Usury laws limit the rate of interest commercial lenders are allowed to charge you when you take out a bank loan. Now, if Minnesota would develop an appropriate cap on commercial loans to consumers, it would protect them and free up a lot of money each month that families could use to save money and to pay for major expenses. And that would, as I am going to show you today, create millions of jobs across the United States, including right here in Minnesota. Now, as I understand it, borrowers are always allowed to agree to exceed these state limits. But that's not the big problem, that is, loading up consumers with debt. Believe it or not, the biggest problem we face, that is piling unbelievable, insufferable debt on consumers and Minnesota families and employees, is a Civil War statute. That's right, this statute, called the National Bank Act, was passed in 1864. Now, that's not 1964, that's a whole century before that. Actually, 150 years ago this year. Undoubtedly, this helped the New York banks or whatever banks to make loans across state lines to help those whose homes or lives and families had been destroyed by that very destructive Civil War. And it may have helped finance the war in part. And there it sat for over 100 years. Then technology changed. Bank America developed a way to market consumer credit all across the country, and then came up with a new kind of currency, which revolutionized the way we buy, the credit card. And interestingly, it was a legal dispute that took place right here in Minnesota, in Minneapolis, that led to the filing of a famous and influential U.S. Supreme Court case, which was decided in 1978, nearly 50 years ago. Marquette National Bank of Minneapolis versus First of Omaha Service Corporation et al. Already you had these service corporations who only collected debt and interest from consumers. And it was that case that unleashed a torrent of credit cards, excessive interest rates, out-of-control spending, bankruptcies, foreclosures, and the 2009 housing market crash that threatened the entire world's economy. Because this Supreme Court case gutted usury laws in place in Minnesota and every state to protect consumers, protect the economy, and ultimately protect the nation itself from bankruptcy and fiscal cliffs, which we've now fallen off. And it caused the Great Recession. But now it is a tool to unleash productivity and millions of jobs across the nation. It needs a fix, and if elected to the U.S. Senate, I'll get Congress and the President to make that fix. Now, I want to talk briefly about the severe impact on families and our future workforce requiring us to import labor that is caused by this excessive consumer debt. And we know that consumer spending drives 2/3 of the GDP. Let me read from a recent article in the Washington Post to illustrate the problems and great potential in this situation. This article is about Americans who, because of debt and associated problems with the economy, can't have children, a kind of economic sterility, which is handing this nation over to immigrants and killing not only jobs, but our workforce. As explained by the Washington Post, quote, their dilemma echoes that of millions of American families in this recovery, people who have watched the economy grow and the employment rate fall, but who are still waiting for their own outlook to brighten. Choices large and small hang in the balance, whether to buy a house, go to college, get married, have a baby. I want to get ourselves in a better situation before we start trying, says Melissa, sitting at the kitchen table. And the already difficult economics of the decision are made even harder by the discovery that they will need expensive treatment to conceive. Now, they've hashed this out hundreds of times, pledged to find a way, mapped the options, tracked his hours. They know they can't wait much longer. But is this the right time? We don't want to bring children into this world if we can't provide for them, Rick says, hitting upon his fear. For Melissa, the fear is different. It's that they will never get the chance. And that is the risk we face today, that we are killing our workforce, crippling our productivity and our economy. The decision to have a child is not coolly rational, explains the article, but calculations often play a role. Kids are expensive. Diapers, doctor visits, childcare, food, clothes, maybe college down the road. Assuming that kind of responsibility is an act of optimism, the belief that tomorrow will be better than today, unquote. So gay marriage, as a way of holding down the U.S. population, might be driven by these economics as well. So, continues the article, when the economy plunged into recession in 2008, shedding jobs and expectations, the U.S. birth rate followed, reversing the upward trend seen when times were good. And the birth rate has continued to fall, a sign of just how many Americans continue to struggle in this recovery, 5 years after the recession ended officially. Last year, the nation's fertility rate hit a historic low. 62.9 births per 1,000 women ages 15 to 44, according to the Centers for Disease Control and Prevention. Some of that decline comes from a long-term shift towards smaller families, but finances also play a pivotal role. A Gallup poll last year found the main reason Americans were delaying parenthood was worries about money and the economy, even as the stock market rallied and broad indicators pointed to a brighter future, highlighting a disconnect felt by many Americans. A report by the Pew Research Center showed birth rates in many states rise and fall in tune with personal income, unquote. Now here is a major economic threat. Quote, births have slowed so sharply that researchers note that future economic growth could be stunted by a smaller labor pool. Immigration is often seen as a fix, but the downturn crimped supply lines for both babies and new foreign faces. I know some people will not like the article's reference to supply lines for babies. But where else are we going to get them? The change was so dramatic that the Census Bureau in 2012 was forced to revise the 2050 U.S. population projection it made just 4 years earlier, dropping it by 9% to just under 400 million. The languishing economy has caused people to doubt if they can become parents. Now here's an ad hoc presentation I threw together that I hope will help you understand the impact of this Minnesota case and how it affects real families, and how in turn this creates upward pressure on wages and impacts employers, making it more difficult for them to create new jobs. And after the presentation, I'll just summarize to tie it all up, to show you how to unleash millions of jobs across this country. This is the one solution which all the politicians have been looking for since 2008. And if you look at this, you're going to see that this is going to make your life better. It's going to stabilize your family and create savings for you, which will help the economy. And at the same time, it's going to put employers in the position to create those millions of jobs. Take a look. Marquette National Bank versus First of Omaha Servicing Corporation, a 1978 U.S. Supreme Court case. And this was a Minneapolis bank, Minneapolis Marquette Bank. And its major finding is that, quote, to the extent the enumerated federal rates of interest are greater than the permissible state rates, state usury laws must, of course, give way to the federal statute, unquote. Now, this is an 1864 Civil War statute we're talking about, which has radically transformed the economy because of Bank America's credit cards, which through this national association, they began to go into every state in the country and jack up the interest rates incredibly and just load people down with debt that they didn't even see coming. So let's take a very crude example. John, Mary, and Lisa, a family, a married couple with one child. And John makes $8.25 an hour, which is going to be Minnesota's minimum wage. He works 40 hours a week, and that gives him 4.3 weeks per month. Because you divide 52 weeks by 12, and John doesn't take a vacation. So each month, this family's gross pay is $1,419 a month. Of course, if he takes vacation, it's going to be less. And Mary stays home with Lisa. Lisa is John and Mary's daughter. Lisa likes flowers. So John's family pays $600 each month for housing. This was in 1978. The family paid $150 a month for food. Other general costs amounted to $300 each month that were necessary costs, say utilities, clothes, and this left $369 each month. But after paying $200 a month in taxes, this family has $169 in monthly discretionary income. That's not enough. So John takes out a $2,000 bank loan to pay for Lisa's school costs and a few new things from Omaha Bank, the one that the Supreme Court allowed to come in from Nebraska and charge Minnesota borrowers these rates cooked up in Nebraska. Now the interest rate is 18% and the minimum payment is $50. And the Marquette interest rate would have been 12%. and the minimum payment would have been $40, but let's assume John and Mary would have paid $50 a month. Let's compare and see what happens. Well, after 12 payments, a year of payments, John has paid $340 to the Nebraska bank in interest payments alone, where he would have paid only $220 to the Minnesota bank, Marquette. But now he owes $110 more to the Nebraska bank than he would have owed to Marquette, with the same $50 monthly payments. At $8.25 per hour, these differences of hundreds of dollars in 1 year of a consumer loan would make big differences. And during these years, the Nebraska bank is slowly being paid back. These costs are multiplying and new costs come online, requiring more bank loans. And at some point, the Nebraska bank is going to say, we can't extend you that much more credit. And perhaps they'll default. Or perhaps John will lose his job or some hours, or maybe just have to take a vacation. Mary at some point may have to take a part-time job to pay for Lisa and the family. That's going to bring on more costs because she's going to have to pay for a babysitter, gas, and food while she goes off to work. And eventually they're going to probably have to borrow even more money, and these differences are going to be even greater. Now obviously we're talking about if they're just borrowing $2,000 to augment their $169 in discretionary income. They're going to also have very similar mortgages. So that $600 may be compounded, and we're going to end up with a great difference. And of course, 18% is not a lot right now. And if they ever default, it's going to go way up. So I'm saying that if we can allow the state of Minnesota to force the Nebraska bank and any other bank that comes in to lend our Minnesota residents money, we need to hold them to the usury laws of Minnesota. Then these standard loans need to become widely available at the usury rate level or beneath to all Minnesota borrowers who can qualify, so they don't have to accept higher interest rates than the state usury law by so-called volunteering for it, and they don't have to take private loans from people under contract and agree to pay them a higher rate. So in this case, Mary's not going to have to take that part-time job. That job is going to be there for someone else to take. They're going to have more money. We're talking about hundreds of dollars just on this one $2,000 loan that they could spend on goods and services that other Minnesotans might produce. And of course, these are very small rudimentary figures, but I believe that if this was extended to the entire country, that this would create millions of jobs, and it would also result in more stable households and happier households. So that is how this would work. I don't have time to put together an actual economic model based on real families, but I'm just showing you how the mechanics work. So just where do I think all these jobs will come from? Is it just that other families won't have to look for part-time work just to keep the family afloat? Or that families won't be able to get by on just $2,000 and the impact is going to be even greater than I've shown? Well, yes, both these things are true. There will be a need to borrow more than $2,000 from many families in real life. And if we could take these burdensome consumer borrowing costs caused by foreign banks out of the household budgets, moms could stay home and add their work around the house and around the family, and families could still buy more of the things they need. But the real benefit from taking this excessive consumer debt out has to do with the cost of the employer. Let's say John works with 80 other employees in his company. 60 of them make his same wage of $8.25 an hour, and they all work the same hours. 20 employees make $14 an hour and work the same hours. They're the supervisors. So for labor each month, the total cost to the employer is $133,300. You can see the economy looks just a little bit different from the employer's or job creator's point of view. They don't get to take all this money home. Instead of getting all this money each month, the employer has to pay out this money each month on time, like clockwork, or he's busted. And this labor cost is not his only cost. He needs to pay for technology, for instance, leasing and servicing the 80 jackhammers, and computers for the 20 supervisors, and buildings and vehicles and office supplies, utilities, and he needs to pay investors and lenders as well. Maybe not each month, but every quarter. What John's employer would like to do is to set John's wages and his co-workers' wages based on market demand. How many workers are out there by John's employer, and how much do they expect to earn? And how much do they need to earn? Well, because all of them are affected by the Marquette versus Omaha Servicing Corporation 1978 Supreme Court case, which interpreted the National Bank Act of 1864, they are all facing extra hundreds or thousands of dollars in added excess interest payments to foreign banks each year. This creates upward pressure on the market wage because they can't live and work if they don't pay the extra money to the foreign banks. And this is not the court's fault. They are just faithfully interpreting the 1864 law that allowed the national banks to charge consumer borrowers in Minnesota a higher interest rate than the limits previously imposed and enforced by the 50 states, like Minnesota. And it is Congress that needs to change this law. And that's what I'll do if you elect me. I will get the federal government to get off our backs. Hey, the Civil War is over. Can't you just feel those millions of jobs coming online all over the country? Isn't this what we've been looking for? Well, of course it is, but let me again summarize just how this works. You see, what happens is that employers are in business. They either own the business or they're people with enough business savvy to be able to manage a company or a firm effectively so that they can be profitable as well as competitive within the market that they're in. Now, they're always looking for new business opportunities, and when they see these opportunities, they have to have their costs in line. They either need to be in line right now or over time so that as they break even, moving into a new field, they can be effective and competitive and they can provide you good work. And so if you are faced with so much debt because of these foreign banks, which means these banks from out of state, they're foreign companies under the law, and you're loaded up with so much debt to these foreign lenders that you simply can't just go to work to get the things you need to live. You need to be constantly working 2 or 3 jobs, or you and your wife each working 2 jobs. Maybe you have teenagers that are paying rent, who knows? And so you have to do this because of this burden placed on you by Congress. Now, when these burdens are taken off, because I go to Washington and I say to the Senate and I say to the House, this might have made sense during the time of the Civil War. This does not make sense when Bank of America is breathing down our necks for 35% interest because somehow we've defaulted and now we have to pay them 35%. It doesn't make sense when a person can't qualify for a normal mortgage. And so they're going to give them a high-risk product. But oh no, they're not going to actually have the bank carry that risk. They're going to have the taxpayers or the Chinese carry that risk. And this is what happened, the kind of just crazy business practices by this country's federal leaders trying to favor certain lenders who live off of usurious interest rates. A usury-based capitalist system does not have a very bright future when you're just a person trying to get a job and trying to make that system work and try to live the American dream and try to get your constitutional rights under our U.S. and Minnesota constitutions. So let Minnesota have its usury laws. Let Minnesota use those laws to protect workers so that they can be productive and can work to produce things instead of just pay foreign lenders. Now, I feel quite confident that once this happens, they're going to have a little more money, they're going to be a little more comfortable, they're going to look around, and again, they're going to be pursuing the American dream. And American manufacturers and American service companies need to be there to help them with quality goods, not to just buy for buying's sake. If they have everything they need, they should save it. They should start earning interest and preparing for their future, helping their children to go to college, putting together an estate to make sure that we don't all have to live paycheck to paycheck. It's possible that if this was normalized, that the young people working today who were trying to pay for Medicare and Social Security for the future, those FISA taxes, that they could pay a little higher rate if they have to. But it'll be unacceptable if we force these young people to pay that extra care to Barack Obama, Nancy Pelosi, and Obamacare so that they can pay for those who are getting older and need more medical care today by buying this phony, trumped-up health insurance scam, which is not even going to pay for their own medical care in the future. It's just to make up for a shortfall for some of the people where their insurance is not adequate. Now, we have a lot of problems and we need some thinking. But by normalizing this Civil War practice and saying, you know, this doesn't work in the new technological age, not in a worldwide economy, when we have to be competitive. Let's go back and let Minnesota and the other states have their usury laws. Let's let people have a little space to live and not have to work themselves to death just to pay foreign lenders. I hope you'll take a look at this and look for my next economics primary video, in which I'm going to focus on endorsing two great projects in downtown St. Paul that have the support of leaders here. That is reviving Macy's, which has been shut down by the Central Corridor project, and also by trying to use that downtown light rail service in St. Paul to get a park and ride down in Lower Town and advertise it and have it be adequate so that people can park down there and shop in downtown St. Paul, so that some of the stores that we still have and some new stores that we could put in some of the vacant areas of the whole Skyway system could be brought back online. Let's bring St. Paul back online. I'm Steve Carlson. I'm running for U.S. Senate, and that's why I'm doing all this work. And I hope that you are as excited as I am that by taking the burdens of excessive debt off the back of Minnesota workers and Minnesota borrowers, that we can normalize things and get Minnesota back to work, helping to lead the whole country to get back on track. Again, I ask for your vote on August 12th in the Independence Party primary. I am a hard worker, and I will bring these issues to the table in the general election. And if Al Franken doesn't have anything better, or Mike McFadden doesn't have anything better, I'm going to ask you to vote for me for U.S. Senator there. I'm Steve Carlson, and I approve this message, and I'm trying to take the money out of politics, and thank you for watching to help me do it.
With the free market system, our nation was great. We've got to act because it's slipping before it's too late. Let's give our businesses a chance. You know they'll pull their weight. Vote for change. Vote for change. For independence. Vote for change, for a new direction in the halls of Washington. Vote for change to take our country back when the struggle has been won. Vote for change you can believe in. Vote for jobs and security, but not for Democrats and Republicans, not for bailouts and misery. It's America the beautiful that we want to save. The American dream, the home of the brave. We've got to get our country on the right road again. Vote for change.